thank you for joining us today. We're Blu Sky, accountancy firm working with startup, scale up SME businesses. Adrian here, AD, is our head of tax here, and I'm a client relationship director. And today we'll be going over how to manage staff benefits and their tax implications. Okay. So by the end of the session, you'll have the below noted, but I guess the key thing from us is why staff benefits matter for SME business owners, startup, scale up, and again, more experienced businesses as well.
That's right, Josh. We'll try to keep this practical and informative, and basically that allows you to go away and have some more informed conversations within your business.
So I think one of the key things to consider is before we actually look at the various benefits offered, let's start with actually why they matter, especially from a business owner's perspective as well.
Yeah, thanks, Josh. So I think the way we've broken this down is there's sort of three ways of looking at this about why benefits matter. And first of all, it's what's the business case for offering staff benefits? Well, effectively, what we've got is if you've got a competitive staff benefit offering, that should allow you to firstly attract, but then also retain the best talent. So it's a competitive world out there. Employees need to be sort of finding ways to stand out, or at least at a minimum, not be behind their peers and competitors. So staff, your benefit offering plays an important part in that. I think if you can provide a good benefit offering to your employees, that can have a boost to your staff morale and ultimately, productivity gains. That's what this is all about. But it's all about making your staff happy as possible ultimately, or at least giving them another reason to retain within your business and feel like they are valued. And then, that leads into obviously what they put into their role. I think what we've seen and the way it's generally viewed is that, looking at your benefit offering can be more effective in some cases than salary increases, particularly where we've got higher earners that might be crossing tax bands or losing personal allowances, for example. So it's important to all your staff, quite frankly, and if there's a way that your staff can effectively achieve the same output but potentially more tax efficiently, well, that's good for them. It's good for them personally, but also if they feel good, hopefully good for the business. So I think putting tax aside, actually there is a real case for thinking about your proposition before we even get to tax. But if we then move on to sort of some of the employer tax advantages, well, there's a range of benefits that you can offer, and each of those can have different tax implications. So there's some benefits that will mitigate the employer's NIC charge entirely. So that's a 15% saving on the value of that benefit. There's certain benefits that you might be able to put a salary sacrifice arrangement in place. So that's where the employee is effectively contracting to give up a proportion of their salary in exchange for a non-cash benefit. So that works for both the employee and the employer. There's income tax or PAYE savings for the employee and also NIC savings, but there's also an employer NIC saving on top of that. So again, that can be very beneficial. And then there's lots of, benefits that may be a cost to the business, but they would be tax deductible against your corporate tax liability. So, that could be up to a 25% tax saving, or at least a minimum of a 19% saving, depending on if you're a smaller business. So, there are benefits to both sides of the coin here, although those tax benefits vary depending on the exact benefit being offered and what the tax implications of that are. Within that, we've got, or thinking about the not different types of benefits specifically at this stage, but there's sort of broad categories. So we've got benefits that are taxable for the employee. So things like private medical, you can have interest-free loans. These, you look at effectively the cost of the provision of that benefit versus any cost incurred by the employee. And the difference is effectively a taxable benefit that would form part of a employee's P11D for the employer's filing, and also the employee would get a P11D form to show what the taxable benefit was. There are other benefits that are tax-free. So again, there might be some provisions around that. Is to having to be offered to all staff is a typical one, but things like workplace parking or certain hot drinks or even meals in a staff canteen, these can all be tax-free. And again, that's something that could be valued by your staff depending on the specific circumstances of your business. There are also things called trivial benefits. These are kind of very small benefits under £50 that can be used for more to kind of mark occasions or special gifts, I guess, that they're not meant to be contractual or linked to performance anyway, but they're a way of, again, making your staff feel good on certain occasions. That could be a work anniversary or a birthday or for some other reason. And as I've touched on, we've got these sort of salary sacrifice type benefits. I've explained already that there's a formal agreement is required, so it's not just that you can say, your employee will give up certain salary and therefore you'll provide this benefit. There does need to be a formal agreement to support that. But historically, I've seen salary sacrifice for things like pension contributions or car lease payments, but I think it's much broader these days. It can go as far as sort of nursery providers, even things like tech. You can have certain agreements where you're sacrificing a proportion of salary to get effectively like an amount that you can spend with a tech provider and household goods effectively. So yeah, lots of things, or lots of ways in which benefits can be dealt with. But it's kind of understanding at a sort of benefit level how those impact individually. I think a key takeaway is that good benefit packages can differentiate a company without increasing that payroll tax burden. So it's all about taking a strategic look at your benefit offering really as you roll forward.
Okay, thank you for that, Adi. I think let's take a look then, with that in mind, some of the variety of benefits employers can provide. You may have mentioned a few already, so just for you to take over.
Yeah, conscious there's probably a degree of repetition and, I may touch on things slightly out of order than what I planned to, but I'm sure we'll cover what we need to. We thought it'd be helpful now just to, I guess, take a bit of a closer look or try and group into some sort of themes, the different types of benefits that you might want to offer as an employer, and again, some of the implications for you or your employee as a result. So if we start with pension, this is quite a key one, quite frankly. Since 2018, there's been auto-enrollment requirements for employers. So the employer has to contribute a minimum of 3% of an employee's gross salary, and an employee has to put a minimum of 5%. So you get a total of 8% of your sort of salaried earnings going into a pension year on year. Now, again, this will depend on the profile of your business, but if you go to the other end, without getting to the detail, because pensions is a whole area in itself, but in broad terms, there's an annual allowance, which is the amount you can contribute to a pension and get tax relief on, and that includes employer and employee contributions. So for the current tax year, that allowance is set at £60,000, which is quite a considerable number. There are different ways in which you can achieve that. You could have employers making contributions without any employee contribution, or typically you have employer and employee making contributions. But like I say, it's quite a significant figure. But there's different ways in which making those contributions get tax relief. I guess the most advantageous is by a salary sacrifice arrangement. So as I've said, you would give up a proportion of your salary and that would go into your pension instead. And as a result, the employer would get some national insurance savings. What we have seen before is that off the back of that, employers might actually reinvest those savings on the employee's behalf into their pension. So, there's goodwill there that some of the savings that are generated by the employer top up the employee's pension scheme going forward. So I think that's is an important one. I guess the questions are, you've got to think about, well, how do we put that arrangement in place? And then, what are the degrees of contributions as an employer we're willing to offer? And that will depend on your business, quite frankly. But I do think it is an important part of the benefit proposition. I think employees do look at it. I think they do compare one employer with another. So it's important to be at least competitive. You may not be able to offer the highest by way of contribution, but I think you need to be thinking about that as an issue in itself, because of the fact that the tax benefits for pension, all being well, the sort of compounded earnings that arise within a tax-free wrapper, that becomes quite valuable and does become a reason why employees stay at firms. So yeah, important to give that one some thought. If we move into sort of health and wellbeing type of space, there's all sorts of things here. So one of the ones that a lot of you might have heard about is sort of cycle to work scheme. So basically this is where an employee basically makes a monthly payment for hiring a bike that's should be used for work commuting. And then what typically happens is there's a agreement that the bike is then acquired at the end of a sort of certain period. Sometimes it's 3 years. Again, that's something that can be dealt with by salary sacrifice, and also now thinking about sort of the modern world, e-bikes fall within the scheme as well. So a good way to sort of encourage a bit of health and well-being on the part of employees, but also in a tax efficient way. The bigger employers may be able to offer things like on-site gyms, and if these are available to all staff, then that's typically a tax-free benefit. If that isn't possible, again, you might want to think about, well, we can't do that, but have we got any buying power or any sort of any relationships in place where we could secure some sort of corporate discount for employees? So this isn't necessarily coming from a tax angle, that there may not be an employer or an employee tax saving as such, but if you're able to offer your employees, discounted services somewhere, again, that might be something that they value. The other things I've seen with certainly bigger employers is EAP, so employee assistance programs. Typically, these are around sort of counselling support, and if the services are around that sort of counselling support, then the benefit itself is tax free. Again, we all sort of go through life in different ways, and then there may be need for sort of external support, or just have another voice that we can take to. So it is something that can be valued by your employees, and it might be worth thinking about. And then for those who are sort of, I guess, primarily office based, and it won't apply in all cases, but things like eye tests can be tax free if you've got users of sort of video displays. That's sort of part of their primary role. So again, that can be quite like a nice little offering that you can bring as part of your program. If we move on to the next bit, sort of training and development, without sort of labouring this point too much, but I think staff value support you can provide that's away from the sort of core day-to-day activity. Certainly in our world, you need technical training as part of your sort of kind of membership requirements anyway, but any work-related training that you can provide is a tax-free benefit to your employees, and that would cover like not only fees for any courses, but any training material or travel, so on. That all kind of wraps within that. So all of that's tax-free, and I guess from a business perspective, it gives you the opportunity to tailor that training to your business needs. So yeah, there's a benefit to employee, but as an employer, you can try and shape how that works best for you, I guess. We then got the sort of topic of electric vehicles, quite topical at the moment, to be honest. Most or a lot of companies have a bit of a sort of ESG agenda at the moment. I think I've seen a lot of firms where actually any sort of company car type scheme, they are limiting to just electric vehicles going forward. Now there's clear tax benefits to an employee whilst doing so, but also there's benefits to the employer depending on how the car arrangements are structured. So just from an employee perspective, a company car benefit in kind charge is based on a list price and a benefit in kind rate. The benefit in kind rates for electric vehicles currently 3% versus hybrid cars are anywhere between 5 and 12%, and petrol and diesel range from 25% to 37%. So you can see there's a huge differential there. So even if you've got a pretty top spec electric vehicle, your benefit in kind charge is a proportion of what you would get if you had a probably lesser spec petrol car, quite frankly. So there's definitely a shift, I think, from employees to moving towards like taking out electric vehicles. And then from the employee perspective, again, depending how the arrangement is structured, there may be capital allowances available where you can almost write off the cost of vehicles in full. So that might be more appropriate in smaller businesses where you're actually potentially acquiring the vehicles. In larger companies, that it may just be lease arrangements, so may not be quite the same opportunities available from a tax perspective, but certainly it's something that's worth looking at if you are thinking about a company car proposition. we put another label staff benefits, which kind of might blur the fact this is all about staff benefits. But I think what we mean by this is some of these smaller things. So start with like staff parties, for example. There is an allowance within the tax legislation that you can spend up to £150 per staff member for an annual function. So this could be a Christmas party or a summer social or something of that nature without any taxable benefit to that individual. So, depending on the size of business, that amount of money can ramp up and give you a decent budget to work with, and I guess allow you to, give your staff an enjoyable evening that they really do value. So, it's worth making use of those allowances where possible. Again, bringing your staff together, there's very much a soft benefit to doing that you'd like to think will help your business. And so being aware of what's available to you, I think, is worthwhile. We've also got little small things like work mobile phones. So that's, tax-free for the employee. The cost can be tax deductible from the employer. There might be certain kind of arrangements in place around that you either are limited in terms of personal use, or you sometimes can end up with like dual use contracts where you can pay the employee can pay a proportion of the cost and the employee has a balance, but that then allows you to use it fully for personal uses. So there's different ways this can be dealt with, but there's sort of some smaller things that you don't necessarily need to have big arrangements in place, but certainly it's worthwhile being aware of them, at least thinking about them. I've mentioned briefly before a bit about the trivial benefits. So again, just to repeat the point, that's no more than £50 per item. So this can't be cash, but it can be like gift vouchers. So, you can use it for things, Amazon or places like this, you kind of cash equivalents, I guess, but it can't be a cash gift. Or, things like flowers or bottles of wine or hampers or whatever to, commemorate certain occasions. Like I said, it could be a birthday or anniversary. But to repeat, it can't be contractual. There's nothing there around. You will get these trivial benefits, and it can't be linked to any type of performance. Now, there isn't a limit for employees, but there is a limit for directors. So for directors, you can't have more than £300 of trivial benefits per year, but you can have up to 300. So again, for any directors out there, bear that in mind. That could be quite an easy win for you in terms of utilising this benefit for your own, for you personally. And then the last category we sort of just as a bundle together, I guess, is lifestyle. So, I briefly mentioned before about nurseries. If you can set up salary sacrifice arrangements with certain nursery providers, and therefore we're giving up that salary for the nursery provision, and that can be very tax efficient, particularly for those higher earners where if you're at that sort of 100,000 threshold. I appreciate this might be for some bigger businesses, but if you pass that threshold, it can have implications for tax-free childcare and childcare hours. So if you can stay within 100,000 but also still get provision of the right nursery using a salary sacrifice arrangement, that can be quite powerful. So again, thinking about that as part of your benefit provision can be important. The technology bit we've touched on already. So there are providers who you can offer things like laptops or tablets, or just access to a third party who will sort of provide those things to you for some sort of salary sacrifice arrangement. So again, that's may appeal to certain staff members who are minded of that way. One thing not to forget, actually, which I'll just sort of focus on some of the tax benefits when putting this together, but actually holiday purchase is also often quite a key one. There'll be a standard provision of holiday, no doubt, in your businesses. Some businesses may be happy to allow employees to take further holiday, but pay for that holiday or give up, salary. There'll be a cost to that. And again, that's quite a powerful one. If people have got kids or need a holiday cover or whatever, the sort of standard holiday offering might stretch them a little bit. So if they've got scope to extend their holiday offering, admittedly at a cost to them, but they might find that a real benefit. So that, I think, that is kind of holiday provision is something to be thinking about when you're putting your benefit proposition together. And then the other point I touched on before was about employee discounts. I've previously worked at some large firms where, and a lot of the large firms do this, but you have basically an employee discount at all sorts of third-party vendors. So let's say back in the day, pre-hybrid, where there might be a more formal dress code, you might be able to buy shirts and ties at discounted and so on. But there'll be lots of things out there. It could be cinema tickets, it could be, like sports goods or anything. And if your employee can get a better deal so where they shop typically anyway, through their employment with you, again, it's all about, I guess, keeping them sticky as you can with you as an employer. So yeah, lots of things out there, lots to think about. That's a bit of a high level overview, but hopefully is of some use in sort of forming your thinking.
Nice one, Eddie. Thank you. It was quite comprehensive, that, so I appreciate that. But I guess from a compliance point of view as well, how do business owners actually enforce this, make sure they're on the right side of the legislation with this, Eddie?
Yeah, thanks, Josh. Yeah, there's lots of things. So yeah, we kind of, or to now at least, we try to think about, well, why would you offer benefits, and then also look at the actual benefits themselves. But there are compliance obligations that come off the back of it that are important to be aware of. So in terms of reporting the benefits, there's a few different routes available. There are typically there's filing of what's called P11D forms. So there's P11D forms are what are issued to your employees, and there's P11DB forms which are filed by the employers, and these need to be filed with HMRC. So HMRC have a record of the total benefits that have been offered or certainly taken up by the individual employees. In addition to filing those forms, the filing deadline of those forms coincides with the payment deadline for any Class 1A national insurance that's due as well. So as we said, depending on the particular benefit, there may be NIC payable on the value of that benefit, and that there's an annual payment deadline for the payment of that NIC. Where the benefits are tax-free, obviously there isn't any reporting, so that it's not an issue there. But what I'll come on to shortly, there is a thing called payrolling benefits. So that's, I guess, a sort of newer take on how we deal with reporting benefits and how tax can be collected from that. But I'll touch on that shortly. And then I guess the last point, just a high level flag, is employers can settle tax due on taxable benefits through what's called a PAYE settlement agreement, or sort of shorthand PSA. So this basically allows employers to make a single payment to cover all the tax and either is due on, I guess, minor or impractical benefits that might arise during the course of the year. So it's something that we sort of speak to clients about, whether that's something that works for them. But it's just a flag that there are different ways in which you can capture the reporting obligation. The reason we've brought out the payrolling benefits as a sort of slightly different or separate topic is just the fact that it's very much topical at the moment. So HMRC have been trying to implement the payrolling of benefits. This is basically where you are collecting the tax on benefits and reporting the benefits through PAYE instead of via this P11D process. So effectively, it's real-time reporting. It's voluntary currently and will be mandatory. Oh, sorry, I jumped ahead. I jumped a slide there. Sorry, apologies. It will be mandatory from April 27, albeit that was due to kick in from April 26, but it's been recently pushed back a year. So it's given employers time to think about this. So yeah, not mandatory at the moment, but it will come in from April 27. The benefit of doing it, I guess, is that it spreads the tax cost for employees across the full year, rather than maybe having that single tax point if it's forming part of the self-assessment tax return. And it can also reduce that year-end admin for the business. So you're doing your payroll reporting on a monthly basis anyway. This just forms part of it, rather than having to do a separate exercise for filing the P11D forms. Now, P11D forms won't disappear entirely. They will still be needed for certain benefits, such as company cars and loans, but it will eliminate the reporting of a lot of benefits. So it may not be the perfect solution, but it will help and reduce some of that year-end burden on employers. So yeah, certainly something to be aware of. In terms of those key compliance dates, I guess, the P11D deadline is the 6th of July following the tax year end. So you have to have your P11D forms filed by that date. You've then got your Class 1A and IC payment deadline, which is slightly later. It's the 22nd of July following the tax year end. Now, that's the date if you make an electronic payment of your liability, which, in this day and age, I'd expect most people to do. But there is a slightly earlier deadline of the 19th of July after the tax year end if employees were looking to settle that obligation by cheque, basically. So there's a 3-day differential there. In terms of those payroll benefits, well, that becomes an ongoing obligation. It basically just coincides with your annual payroll or your monthly payroll filing, sorry. So that will just be a part of your monthly process, and that depends on your individual payment runs, which sort of varies by employers. There's no fixed date as such when you do an RTI, but it will go by when you pay your staff and how that impacts your payment runs and so on. So your payroll or benefit obligations would just coincide with that. At the same time, I think it's important to think about, if you are building out your benefit proposition or adding to it, what does that mean in terms of record keeping? Because that will be an important part. If HMRC do ask questions, we need to be able to validate the value that's been put forward for any particular benefit on any particular individual. So, do think about your record keeping in terms of document your calculations. If there's any private use of assets, well, let's keep a note of that and show how you've arose at those calculations. Keep any agreements or receipts, particularly for those trivial benefits if it's under £50, or if you've got premiums that be paid for medical insurance. Keep a record of all those things. Again, if it's ever required. Clearly, if there's a salary sacrifice arrangement in place, make sure you keep a copy of the signed agreement, because that can be important. And I guess on the trivial benefits, again, just maintain some sort of log, because they might completely vary as to, well, what was the benefit? What was the reason that you awarded it? What was the value of it? What was the type of award, and so on? Just again, if there were any queries as a result of when you make your filings, it is important that you've got the records to substantiate the filings that you've made.
Thank you, Edie. I guess, obviously, you probably spoke at length about this, but if you're a business owner watching this presentation, I guess what would you recommend to do off the back of this, based on what you spoke about?
Yeah, I mean, the truth is kind of what's on the screen. There's not much more to add to that, but it's about reviewing your current proposition provision. Is it fit for purpose? Do you think that it's enough to firstly attract or retain the talent you've got? Do you think you're competing with your peers? Do you need to improve on it? I do think really it's probably take a look at what you've got now, and then really on an annual basis look to review that, because the world changes and you need to kind of react to that. And it's easy to have a benefit proposition, but actually, is it one that your employees value? I think that's quite a important question. At the same time, within that, once you've looked at your proposition, we'll think about your internal processes, like how you're reporting the benefits, how you're calculating them. Do you want to move to sort of payrolling of benefits? Will that suit the business, or are you happy with the sort of annual P11D filing for now? Have you got processes to support keeping the records and documents? All these things can play a part. So give that some thought too. I just touched on about do employees value your benefit arrangements? Well, actually, do you ask them? I think that's a key bit. It's a real good opportunity as either a standalone maybe employee survey or as part of a bigger survey. We don't need you don't need to over-engineer this. This could be a simple email to colleagues, or it could be some sort of electronic form you circulate in terms of larger businesses. But what you put together 12 months, 2 years ago, is that still fit for purpose? What do employees value? Is there something more you can do? So yeah, I think it's a good way to engage with your employees on something that's a bit away from their core day-to-day role ultimately. And then I think for the larger firms, if this is a whole area in itself, quite frankly, there could be some very specific questions around employee benefits, and it may be an opportunity that you might need to go and get some special advice. Employment tax is a whole area in itself. So for the right business or the right situation, you might want to go and get a informed view or a bit of advice around what this means for either you as an employer or employee if you were to take certain steps. So definitely some sort of quick wins you could do there, or things for, I guess, a bit of longer term thinking.
If you enjoyed what you've heard today, please reach out to us. We work with SME business owners, tech and service sector backgrounds, but we'll work with and assist clients in a variety of sectors as well. Reach out to Adrian or myself on LinkedIn If not, you can always just drop an email or call up and we'll always get back to you. We do a lot in terms of business support, in terms of wider community. So always happy to help, not least with this webinar.
Brilliant. Thanks. Thanks, everyone.
Thank you. Take care.